Welcome to Digital Mandate, a podcast series presented to you by Tech Disruptor Media, where we decode the real world challenges of data and AI leadership. Today, we are joined by Aditya Mishra, Chief Data Officer at SBM Bank India, to discuss operationalizing ethical AI, navigating India's DPDP Act, and measuring the impact of data initiatives. Aditya Mishra, sir, thank you so much for being here.
Thank you very much, Pranita, for hosting me. And it is an opportunity for me to basically share my experience on some of the implementation I have done in this area. So, yeah.
So we'll start with a critical question. How have you operationalized a data governance framework to support ethical AI initiatives, especially for sensitive use cases like credit scoring and lending decisions?
Sure. So, I think that's a great question, Pranita, to start with, because see, especially, banking is a very complex industry, as such, when we compare to, the other industries. Now, here, as you see, the credit is always a very tough decision, right? But in the AI age where basically we live in now, earlier, if you notice, whenever we used to apply for any kind of loan, be it any kind of loan, I'm just talking about 5 6 years back. So how the banks used to do it, they will basically ask for your bureau score. The person is applying, and based on the bureau score, banks used to basically take the decision whether to basically grant him or her the required loan or not. And according to the risk profile, the interest rates are basically calculated, right? So that's for the traditional way of uh, you know uh, sanctioning a loan to a customer. Of course, for that there are a lot of credit decisioning or credit scoring engine, banks uses to have an informed decision. But now in the AI age, we have so much of data right now available. I'm talking about the alternate data, right? Like for example, if there is a person, let's say that person doesn't have any credit history because that person has not taken any loan for that matter. But from the alternate data, I know that that particular customer is basically very much credit worthiness. Like alternate data, when I say, like for example, that customer is an affluent class customer. Now, when I say affluent, the how to define an affluency is basically, let's say the customer always travels by business class. That's also data, right? The customer maintains a very elite lifestyle, right? Owning very expensive vehicles, automobiles, all those things, right? Those are all alternate data, which is basically very much available in the public domain. Now the banks are also using these data, alternate data, mixing this data with the mainstream data and taking the credit decision. This has already started happening from last 2 3 years as the alternate data is getting more enriched, available via in a more authenticated manner. Things are happening. Now, in this, what is happening is, you understand, whenever we are dealing with alternate data, there are always a chance of false positives because these data points can be easily manipulated. Because, of course, there are agencies. As a banker, now, or as a chief data officer, it's always a very tough decision to basically how to implement or how to govern it. First of all, we have to understand what to govern, right? What part of the data needs to govern and how to govern. So the only thing is that what I have done in my life is basically, especially the model. The models are the one which are basically taking the decision. So therefore, it is important that the model are learning the right way, provide the right, uh, not only the volume, the veracity of the data to the model, so that the model understands exactly. And second thing, I am not only taking the decision only based on the output of the model, whatever the model is. I am also applying another side of lens, like in the banking platform, we have a lot of these, like the peer bank data or the peer data as well, in terms of really validating the facts, right? What as per the output of the model, and then taking the decision. So, so the bottom line is the governance framework, where basically we earlier used to manage the metadata and the master data and the data life cycle completely and the complete lineage of the data. That is not the only data points required to basically manage the data governance framework in the AI world. Now, in terms of how to part of it, that how to implement it, it depends on the size of the banks, right? I'm from banking industry, so I can talk about banks. Now, the data and information maturity of the banks, varies from one bank to other, right? Like for example, the new age banks, the neo banks kind of a thing, they have a very different challenge altogether. Whereas the legacy banks, they have very different challenges. The legacy banks, they have customers residing in multiple systems, multiple places. Now you have the data coming in from the social media or from the internet or from the mobile channel. Now how to basically marry the data with the mainstream data and with the alternate data, and then taking the credit decision. This is a kind of a kind of a whole holistic model of basically implementing it from a governance standpoint, and of course ensuring that at each stage I am monitoring the output and then feeding it to and then feeding as an input to the next stage, and then again validating the output. So this is the journey basically which you have to follow. And of course it is important to basically devise again, there is no common laundry list of checklists. The checklist can vary from, as I said, like the data and information maturity of bank to bank, but yeah, a robust checklist where I know that what I am basically checking, why I am checking it, and how I am continuously evolving this checklist. It is not that once for done. Based on the learnings, how exactly I am basically kind of enriching my checklist. So these are some of the ways and means to basically govern the data in an ethical manner, I would say.
With India's DPDP-A, which is the DPDP Act now in effect, which architecture or tools are you using to enable constant management, data minimization, and auditability?
So yes, you are right. Because of all these AI related thing and the digital disruption is happening, so that is the whole reason for the government to basically push for the Data Privacy Act, the Digital Personal Data Protection Bill, which is an act now. So this act is a very meaningful act, and of course, it's like a kind of we say in the Western world we have this GDPR, right? So it's basically kind of 70 to 80% kind of similarity with the GDPR part of it. Now, in this, the whole centric or whole the concentration point of this act is basically prevention of the interest of the customer, right? That's how the if you see the crux of this law is that, like, how exactly I'm protecting my customers' uh, data basically. So now in this act, now as you rightly said, the data architecture which we used to create earlier, we used to have what we have used to have variety of sources from where basically we used to onboard the customer, and then we basically take the customer data, and then basically we used to pre-process it, cleanse the data, and then basically move it into the organization of the data, basically how exactly the data will be organized into, in what form, shapes, of course from a dissemination perspective. And then once the data is organized, then we basically process the data. After the processing of the data, we used to store the data, and after storing, we used to basically provide the data to the various downstream systems, like your uh, customer relationship management system, to the call centers, right, to the other marketing departments, and to the other analytical departments, risk department, and so on and so forth. Now, in all these things, if you see, the data is right from the onboarding to the dissemination stage, the data is basically getting kind of I would say transmitted in various forms or the other. Now, before this act, uh, of course, you might have noticed, Pranita, that you also must be getting a lot of calls from the banks that you want to get personal loan, you want to get home loan, and you might be wondering that I've never approached this bank. How the the bank, I won't say bank, let's call it regulated entity. So all these things are happening because somewhere the data leakage is happening, right? That's the reason my mobile numbers are accessible to these entities, and they are calling it as a part of their cross sell or upsell strategy, right? Now with this act coming into the picture, as you mentioned rightly, that customer consent management is a very important, right? So, in the right at the start of the stage where basically I'm onboarding my customer data, I will have my entire customer consent management framework implemented it. Now, let's say, for example, if I onboard you as a customer of mine, and let's say, for example, you have approached the bank to open your, let's say, savings account, right? So I've onboarded you and opened your savings bank account. Now, as a bank, I know how much balance you are maintaining, right? I'm talking about the CDABs and MGBs and the MEBs, like month end balances you are uh, maintaining it. Now, that's an important data point for the banks to basically cross sell and upsell. Like, for example, let's say you are maintaining a very healthy balance. So I might basically offer you that, hey, why are so much of money you are putting into your savings account? Why don't you basically buy, this particular financial product, be it like any other investment product, because you are going to get more good rate of interest there. Basically, here you might be earning 4 to 5%. but there you might earn 8 to 9%. So why don't you basically push it there, right? This kind of things happen. Or let's say you have some loan with some other bank. Now you want so basically the bank can approach you for doing a kind of balance transfer kind of thing. So these are again part of an upsell strategy. Now here the with the DPDP Act into the picture. Now what I have to do is I have to take your consent as a customer, that whether you want your I mean to say the details like the PII, we call it, the person identifying information, which includes your mobile number, the contactability part of it, mobile number, email, or whatever. That whether you want us to communicate to you for any cross sell and upsell opportunity. And let's say the customer, as you says, no, I don't want the bank to contact. So there, in that my customer framework, I have to basically tag it off, which means that I am not going to transmit your data because you are at the onboarding stage. I'm not going to transmit your data to any further downstream system. I will stop it right there itself, so that so that in the entire value chain of the data, your data will not be processed, your data will not be used for any kind of analytical purposes, right? Any kind of credit scoring or any kind of for that matter, and it will reside unless the checkbox is becomes yes. Like for example, the customer might come and say, no, I would like to get connectivity from the bank for any upselling process. So that's how the consent management framework in a nutshell is. Now, of course, there are a lot of tools and technologies available in the market today who are offering. We have also implemented a robust customer consent management framework, which is basically helping us in terms of managing the guidelines, I would say, of the Data Privacy Act.
How do you quantify the business impact of data initiatives, and what KPIs matter the most? And I think this falls very nicely with what you just said about the data, because I believe with, especially when it comes to fraud reduction and the kind of calls that you were talking about, these do fall into data initiatives as well, especially how that impact the business portion of BFSI.
See, Pranita, two things actually. See, these days the data investments are huge. It is not that very small investment it is. So therefore, the return on investment are very very important, right? So there are many ways to quantify all the data initiatives. Of course, there is no a generic framework because the data and information maturity, as I said, varies from banks to bank or entities to entities. But yeah, some of the things are like, for example, the data-driven sales are happening, right? For example, my CRM or my customer relationship manager, where basically I'm providing a lead to my relationship manager that okay, this particular customer, based on the data, of course, based on the transaction behavior and all, I am certainly, I'm confident 90% that this person will basically definitely buy. Example, I'm making it up, an asset product A. So please go and pitch him this particular product. Now, if the customer turns up, let's say if the customer, I'm talking about the targeted campaigns basically. So the effectiveness of the campaigns are measured in terms of converting it into the actual business. So basically, the worth of effective campaigns and how much of them are converted into a committed business in terms of course, in terms of INR terms, and how much worth of basically business I generated from that. That's one way to basically kind of uh, kind of quantifying it, and we call it like data monetization. How exactly I'm monetizing the data in terms of basically that's one part of it. Second part is of course on the risk side of it, right? Like for example, through let's say my credit risk team says that okay, you please go ahead, and grant this much amount of loan at this particular rate to this particular customer. But now as a data, I know that this particular customer, let's say credit scoring team is saying that this customer is less risky. Okay, less risky, and we can offer that particular customer rate at whatever that particular applicable band is. But now from my data, I'm saying that this customer is not less risky. The customer is basically more risky now. So therefore, you have two options. Either we should not go ahead, or if you want to go ahead, the rate of interest will be very high, right? So if through this basically I am protecting, the entity's money in terms of the, otherwise it could have basically turned into a bad credit, and it can ultimately become an NP, and then ultimately the entities has to write off, right? So that much prevention has happened because of data, right?